In today's video, I will be breaking down several tools and indicators that you can use to help navigate your way through the crypto market. These tools and indicators are free to use on TradingView, and whether you're a beginner or you're leveling up, today's video will provide a brief introductory aspect on how to apply these tools and indicators to your charts and what they mean. Nothing that I say is financial advice. Let's dive into the content. So I've got a blank canvas here on TradingView, and I'm going to use a Bitcoin up here in the top left as the asset today, as I feel like it has the most reliable data and it's just simply easy to go off. Now, what we need to do to start off with to actually apply anything to our charts is come up to indicators up here on the bar, click on this, and it will allow us to search for whatever indicator we want to apply to the chart. So I'm going to cover a few today that I feel are very important and for anybody's stockpile. And we're going to start off first with moving average exponential. So if you just type in moving average, it will come up here as moving average exponential, and in short, they are called EMAs. Okay, and I use two EMAs and for specific reasons. So what we're going to do is click on moving average exponential, and you'll see it will bring up this blue line on the chart. We're going to click it another time, so a second time, and we should get, well, we got to get one line because both EMAs are the same length. So that will add it to your chart, and then it will be on here for you. Now, to customize these EMAs to our preferences, we will come up to here, and you can see that what it is, it tells you what the indicator is. It's a moving average exponential, an EMA. This is the length of the EMA, and then this is the source for it. Okay, these don't really need to focus on this too much, but what we are going to focus on is settings. So we're going to customize these EMAs to our own preference, and you can see it gives you inputs, style, and visibility. I would ignore visibility and just focus on inputs and styles for your personal preference. But two EMAs that I like to use, first off, are the 20. Okay, so this is the average price data over a 20-day period, okay, which is basically what an EMA is. But just focus on the two numbers that I use here, guys. So one is the 20, and then we're going to go to style, and I like to have it in yellow, and I like it a little bit thicker on the chart, so it gives a bit more detail. So that will add that EMA for us and change it to the length of 20, okay, this yellow line. We will now go back to the second EMA, go to settings, and replicate the same thing, but instead of the length being 20, we're going to use 55. So this is a bit of a longer length moving average compared to the 20. And then I'm going to customize it and put it as a red, and then add extra thickness for more detail. Red and yellow, I feel like are very easy to remember in color, and they give a good contrast. So now we finally got these indicators onto our charts. What we're going to do now is explain how and why we can use them. Okay, so what we have to start off with are two pivotal signs that these EMAs can give us in regards to which way the market could be trending over a long period of time. Now, I didn't state at the start, we're studying the weekly time frame. So the more zoomed out you are, the more reliable these patterns could be over a longer period. Now, on the weekly, the two signs that we like to look out for here is when the yellow line crosses below the red line, and when the yellow line crosses above the red line. Okay, so remember, the 20 is the yellow and the 55 is the red. They both have different lengths. When the yellow, the 20, the shorter EMA crosses below the larger EMA, so when the yellow goes below the red, this indicates a bearish cross. Okay, so this signal right here that printed back in April 2022 would have indicated a trend direction over a long period of time. And this is where Bitcoin actually had its bear market and led all the way till November of 2022, where it put in that $15,000 low. So this signal back here would have been a key indicator to look for a macro downtrend. Now, when you're beneath the EMAs, you can see that the price action is beneath both the yellow and red lines. When you are beneath these EMAs and you're failing to sort of break above and you keep sort of running towards them, but you're not getting above them, this indicates a strong downtrend. Now, we also have the opposite. Now, this right here, this cross is called a bullish cross. And this is where you can see from 15K, Bitcoin eventually got back above its 20 EMA, retested it for support, and then continued to break out. Now, when it got back above the red and the yellow lines, you can see it was a bit overextended. So the prices can sometimes get too far away from the EMAs and they act like a magnet to pull them back down. The same is to go for either direction. You can see the price at 15K was pretty far from these EMAs. So like a magnet, it retraced us back up to them. So when you're in a downtrend and you get too far extended, you will see some sort of retracements, okay? But as long as you're below the EMAs, it's a downtrend. And vice versa, if you're above and coming back to them for support, this confirms an uptrend. So this right here was a bullish cross on June the 23rd. And ever since, other than a couple sort of few weeks of deviation around this period, Bitcoin has ever since been retesting its 20 EMAs as support and it's 55. Okay, you can see actually on the last two corrections, major corrections, Bitcoin came back down to this red 55 EMA, found it as support, and then continued higher. Again, here we had a 1, 2, 3, 4, 5 wave correction. It brought us back down to the 55 EMA. And then we've gone in and put a new all-time high. Currently speaking, we're holding the 20. So when you're in an uptrend and above these EMAs, guys, this indicates it's a strong uptrend, especially on the weekly time frame. So right now, Bitcoin is in a bull run, okay? And it doesn't feel like it for altcoins, I know, but just for this specific charts and for these tools right now, guys, and these indicators, this is a strong indication of Bitcoin season. And this is why Bitcoin is so strong, because it's having corrective phases after large runs up. It corrects back to key moving averages and then continues, corrects back to key moving averages and is continued, okay? So that's the two most important tools or sort of signs that these indicators provide. When the yellow crosses below the red, it's a bad sign. It's a bearish cross. When the yellow crosses above the red, it's a good sign and it's a bullish cross, okay? And they tend to help with trend direction. So that's a breakdown on those key EMAs right there. We'll take those off now. By the way, you can just click on this eye and it will hide them and bring them back up on the chart for you. Now we're going to come back to indicators and we're going to have a look at the stock RSI right now and how we can use this oscillator and what it actually means, okay? So the stock RSI, if we come over here to the right, the stock RSI ranges from levels of 0 all the way up to 100. And there are several readings on this chart that we can use to help identify us in trends and whether we're a bit overbought or whether we're oversold. So either providing an opportunity or whether it's notifying us to take something off of the board. So anything sort of below the level 20 over here on the right, anything below that indicates that you are in an area of oversold territory, okay? And this is where price could potentially be offering opportunity. Now, if we analyze these points of contact in the stock RSI with the chart, we'll focus on this one right here. So this week, if we look at this bit of price action here, you can see the stock RSI was oversold. The price was correcting and then it had a pump, okay? So this indicated that we was looking for some relief. Fast forward to this oversold area below 20 here, coming up to the price. This was a very strong actually indicator of a massive upside move. Fast forward, we did have this here, which is an anomaly. So again, this indicator doesn't necessarily directly indicate that it could be providing an opportunity here, or it doesn't necessarily mean it's going to have to roll over, because you will see that at the top, it looked like this would have been a good sign to take off the board. Okay, when you're at levels above 80, for example, so we was looking below 20, right here was above 80, which would have been screaming, hey, take something off of the board. But nonetheless, Bitcoin continued and didn't correct until later on. So again, we don't specifically use this as a tool on its own to identify the end of a correction or the end of an impulsive move, but we do use it to identify potential areas of opportunity. Okay, now fast forward again, if we look at sort of July, around this period here, it was a bit choppy, but nonetheless, this is where Bitcoin found a bottom. And again, you would have appreciated if you held on until the rise in the stock RSI, because the price appreciated up to new all-time highs at 110K. So, you know, below 20 offers areas of opportunity. Anything above 80 is an area where we should be at least concerned. You can see back here in December, sort of January 2025, we was above 80 in the stock RSI. This indicated we was going to come for a pullback, and we did. If you look back here at sort of March 2024, we was very overbought on the RSI, above levels of 80, reaching sort of 95, and we came in for a correction. Prior ones up here, you can see as well, sort of April 2023, came back in for a multi-week correction. So confluence here that when you are above 80, be cautious, okay, and use it to aid with other indicators and tools such as EMAs. If you combine the both of them, let's say, for example, we're in an uptrend on the EMAs and the stock RSI is in the floor. I think that sort of shows a strong opportunity. Let's look at this, for example, back here. Where should we look, for example? Let's look at this sort of area here. You can see that the price actually came back to the 20 EMA for several weeks and hovered around it, and so did the stock RSI. So in an uptrend, you're sort of hovering around the 20 EMA and you're in oversold territory below 20. This would have been a sign to say, okay, maybe this is a good time to enter a long position, or I think that the market's going to pick up here. And that's exactly what happened. So, you know, you can use them together to help identify or paint a clearer picture. But that's the stock RSI. Anything below 20 is oversold. Anything around 50 is neutral. And anything above 80 is overbought. Okay, so that's how we use that indicator on the charts. Now, the last one that I wanted to look at today was actually a different one I'm going to get on for us here. This is going to be called the super trend indicator. Okay, so just type in super trend, and it's the super trend strategy, I believe. Is that the correct one? No, it's not. That's not what I want to use. So do not type that in. Just type in super trend. It should come up. Here we go. It's the top one here. I'm going to favorite it to my charts. To favorite, just simply click on a star and it will add it to your favorites to save you searching every time. But I've added it. I'll click it, add it to my chart. And this also is a great tool, guys. Okay, especially if you use it in combined with, let's say, a 20 EMA. Let me just get the stock RSI off down here. Close that off and remove it. Then we'll get the 20 EMA back on. So if we use two tools together, we paint a clearer picture, okay? But let me explain the super trend first. So the true super trend indicator also provides us key signals or trend flips or directions or resistance or support. It's a perfect aiding tool. Let's say, for example, back here on the 27th of December, what we have is two lines on this chart. You've got a green and a red. Whenever the price is below the red, okay, so below this red indicator, this is a downtrend. Whenever the price is above the green indicator, this indicates an uptrend, okay? So you can see that we actually flipped bearish from a bullish trend into a bearish trend on the 27th of December, 2021. And then since then, we had a large bear market all the way until January 2023, when we actually flipped from a bearish trend into a bullish. So this indicator alone, at certain points, when it did print that red bearish indication, and at this point here where it printed the bullish indication, would have been a perfect way to look at a bear market top and a bear market low, albeit considered we did have this red trend flip here back in April 2021. But let's be honest, this is when most altcoins actually did top out. Okay, and this was just a bearish divergence that led into a 5-wave corrective bear market. Okay, so there are anomalies as well, but nonetheless, this printed the bull market top and this printed the bear market bottom. Now, ever since, what we see in these up and down trends, so remember, as I said, when you're above the super trend, this is an uptrend. When you're below the super trend, this is a downtrend. Now, when you do get these impulsive sort of moves up, so you can see that we had this impulsive wave up here and we put in a local top. At this point, what you tend to see in the uptrend is corrections back down to a key level of support. So we had this ABC correction. You can see that the super trend kind of flatlined, waiting to see what price was doing. And this flatline essentially meant a correction or accumulation. For example, let's go up to the top here. It's a very similar scenario. We ran into a key level of resistance. The super trend flatlined and we was in some sort of falling wedge or broadening wedge down here. And you can see we corrected back to the super trend right here. We corrected to the super trend and then pumped up again. Now, from this high where we're trying to break right now around this area, you can see the same thing happen. We had this sort of 5-wave correction right here. We had 1, 2, 3, 4, 5, and it brought us back down to the super trend. Oh, for God's sake, I need to stop doing this because I've got my magnet on. It brought us back down to the super trend for support in a 5-wave correction. And then from the super trend where it flatlined for that correction, it's now taken off and you can see it's curving up again. So right now it does look like we are in the middle of a breakout here and we're just trying to tackle out of this resistance. But nonetheless, what I'm trying to say is when you're above the super trend and you correct to it and it flatlines, it normally signifies that you are 1, in an uptrend, a macro uptrend, 2, it's just a correction / accumulation phase, and 3, another move is coming. So again, we've just had a long period of accumulation, a retest back to the super trend indicator, which started to pick up in May. So this is still on the uprise here, but I hope you can understand that. You've got the trend flips, which are the most important, from bullish to bearish, vice versa. And then you've got the corrections and the flat lines on the way up in the uptrend. And the same is for the downtrend. You can see during the downtrend, it flatlined here and the price tried to get back up again, but it was just forced down. And then the trend continued downwards. So that is another great tool to add. So today, I think we've covered the EMAs, we've covered the stock RSI and the super trend indicator. These are vital indicators to get onto your charts, guys. I will leave it there for today, but I will be back soon with another few indicators that you can use. Just keep in mind, all these indicators are free on TradingView. And you can use any two at one given time. You can also buy the extra package, which gives you additional indicators, but I like it simple and sweet. Nothing that I say is financial advice. I hope you've enjoyed the content. Peace out.